Hey everyone, and welcome to the Ncast, a podcast from Ncontracts. I'm Guy Weissmantel, your host, and as we wrap up this first season of the Ncast, what better way to do so than with a great survey on our industry and a discussion with an expert on the findings and what it all means for us, just the type of content you need as hopefully you're sitting home over the holidays here. So in our final episode of season 1 of the Ncast, PR and industry veteran Mary York. She's the founder of York Public Relations, veteran of our industry. She grew up in the financial services industry. She recently released some key insights in a survey on what crises would lead Americans to leave their financial institutions, which is a super interesting question. And also how this would vary against different demographics in our cities and towns and states around the country. Also really interesting. Now, Mary's insights on reputational risk and the measures that banks and credit unions and mortgage lenders should consider for compliance and operational risk can really serve, I think, as useful tools to all of us who are looking to avoid crises in the coming months and years. And let's face it, after 2020, that is something we should all certainly be very eager to do. I know Mary, she's a fantastic speaker and she absolutely has her finger on the pulse of our industry. So it's a great way to ring out 2020 and get ready for 2021. I know you're going to enjoy this episode. Let's get to it.
Mary, welcome to our podcast. I'm so glad to have you on.
Well, thank you, Marnie. I am so glad to be here.
I have a lot of questions for you. I have read the survey, the 2020 Financial Institution Crisis Study, and your findings are fairly surprising. So I think everybody who participates and watches Ncast is going to want to be prepared for your findings regarding reputational risk, especially in today's tumultuous industry. So really the synopsis of the survey is, as likeliness of the crises rise, an overwhelming majority of Americans say they would cut ties with their financial institution following certain emergencies. I think that would get everyone's attention. First of all, just what made you want to do the survey?
Well, so Marnie, I've been in the financial institution, the financial industry for about 15 years now, and I've primarily worked with crisis scenarios for both financial institutions and fintechs. And what I've noticed is a lot of organizations may have a crisis plan in place, but they create it, they set it to the side, and they never look at it again until they have a crisis. And at that point, it's most likely outdated. And I think a lot of organizations don't really think that they're going to encounter such an organizational emergency. And the fact is, especially with what we found in the survey, it's very, very likely. But more than that, the reputational risk that comes with it results in a lot of customers or members wanting to cut ties with their bank or their credit union. So it is incredibly damaging. I don't think financial institutions realize just how damaging it can be, and they ultimately need to be prepared for it. So that's really what we wanted to do. We wanted to dig into how bad can a crisis be? We know the cost associated with things like data breaches, but how bad is it in terms of client retention?
Right. So how at risk of a crisis are financial institutions? Can you kind of add a little more color to that?
Absolutely. So if you look at the different types of crises that a financial institution could face, I mean, one of the biggest ones is a regulatory compliance challenge. And if you look at just what's happened over the last 10 or so years, the fines that have been imposed on financial institutions have continued to rise. For instance, since 2008, regulators have imposed over 253 billion in fines, which is creating a severe strain for financial institutions. But then even if you look at just the past year and a half, 15-month time period, regulators have fined banks a record 10 billion. So that's a huge chunk just within the last year and a half. And that 10 billion was strictly from AML compliance violations. So it's very likely, even if you look beyond things like compliance violations, data breaches are on the rise, especially from this past year with COVID. there's studies that are showing that there's been an increase from last year, 33% increase from this time last year. Over 15 billion consumer records have been exposed, and those numbers continue to rise. Just the number of records have increased 284% this year compared to last year. That's huge, and it's just going to keep going up. So financial institutions really truly are at a severe risk of running into just those two things. And that doesn't even go into things like harassment claims, sexual harassment, employment issues. There's just a whole host of things that could potentially happen to any organization, but for a financial institution, it could be absolutely devastating and frankly put them out of business completely.
Yeah, I have seen instances of that. Do crises impact consumer confidence and customer retention?
Absolutely. I mean, according to our survey, 84% of Americans would literally break up with their financial institution if they encountered any number of crises. So that in itself is significant. But then if you look at the specific types of crises, I mean, the number one reason why a consumer would leave their financial institution is a compliance violation. So if they're fined for something like an AML violation and they get a fine, or they're cited by the FDIC or the NCUA, 56% of Americans would consider leaving their bank or their credit union. So yeah, it absolutely impacts the confidence of their customer base, and it also impacts customer retention. Customers are likely to leave, and they may be faced with having trouble getting new customers in. So that it could really be upsetting for a bank or a credit union.
Wow. What about data breaches?
Data breaches are, it's funny, they're actually the number two. That's the number two reason why a bank or a consumer would leave their financial institution. And what's scary about that is, as I mentioned previously, the likeliness of a bank or a credit union experiencing a data breach keeps rising. So you've got that factor where it's the likeliness of you experiencing one is rising, but then consumers, if you experience that, they very likely may cut ties and break up with their bank or their credit union. So it's very scary.
I mean, when I think about my own bank experience, I mean, that's a pretty sticky relationship. If I were to leave and go someplace else, that would take a considerable effort to change ACH, order new checks. I mean, all of my online bill pay. I just find it so hard to believe. And I'm sure there is a reason that people would be like, I have lost confidence in this financial institution. But I'm also wondering how they would find out about it. Like, is it in the local paper? I mean, maybe your survey didn't cover it, but how would those people even find out that their bank or credit union had these enforcement fines?
Well, technically, they're supposed to inform their customers and their employees, or their customers and their members. So technically, they have to let them know that there's been some kind of an issue. But beyond that, I mean, your employees, they are members of the community, so they're probably going to be a little upset by it too. And a lot of times, they may tell their family. They may go home and tell their family or their friends, and then next thing you know, you've got kind of a wildfire just within your own community. And then next thing you know, it's in the local newspaper, or it's on the 6 o'clock news that the local financial institution has experienced some massive data breach or a compliance violation or something catastrophic. So and then you factor in social media. Social media has really poured the gasoline on a lot of these crises. So as soon as someone knows about it, it can spread like wildfire just through Twitter and Facebook and whatever else, social media tools people are using.
Right. I've got to believe for the savvy financial institution out there, using their online account opening strategies could really help to capture people out there looking, during one of those triggering events. Like, there are lots of triggering events that would make someone switch a bank account. It could be getting married, or having a baby, or some life, or graduating from college, like where they're having to change how they manage their finances. And I think probably the financial institutions already pretty evolved on the digital banking front could have a leg up in capturing those who are a little wobbly about confidence with their own existing financial institution.
Absolutely. And then you factor in too, there are a lot of companies coming out with breakup tools. That's been something that we've seen over the last 10 years, but those technologies are getting savvier and more robust and easier for a financial institution to offer it to capitalize on another bank or another credit union's crisis situation, to where they can offer to these new customers a tool that allows them to pull the plug more easily and more quickly to bring them into their institution. So it could be very dangerous.
Oh my gosh. So let's say a crisis happens. Let's say they really get dinged on a BSA violation, and they can be significant. How can a bank prepare for a crisis?
Well, first, before any of that ever happens, they really need to have a crisis plan in place, or at least have some kind of roadmap to guide them on how to handle a certain situation. Obviously, we can't prepare for every crisis, and we can never know exactly the details of every situation, but they at the very least need to have some kind of roadmap to help them figure out, okay, well, what do we need to do? What are the appropriate steps we need to take? But beyond that, if it is a compliance violation, they really need to have a handle on their messaging and how they're going to communicate that to their customers or their members, also to the community. They need to make sure that they have a process in place for how they communicate to the press should they receive any questions about it. They also need to have a process in place for how to handle inquiries. So for instance, the last thing you want is your teller getting a call from the press and then they talk about it when they may not know all the facts, or they may not be up to speed on exactly what's happening. So there needs to be an internal process on what happens if someone calls you. So that has to absolutely be in place. And that's something that a bank or a credit union can easily do before anything happens, and really prepare for it in advance.
Right. Is there anything that a financial institution would need to do in addition to creating that plan?
In addition to creating that plan, yeah, there are a lot of things actually. One thing is they absolutely need to have press training. A lot of times financial institutions will have a spokesperson who is really in charge of handling the communication to the media or to their employees or to their customers. And they need to be able to communicate effectively, but also in a sincere and, not necessarily an apologetic way, but in a way that conveys that they are upset about it, and that they understand the concerns that their community has, and be able to do that in a way that makes everyone feel at ease. So that needs to happen. Beyond that, they also need to make sure that they're practicing these crises. So for instance, crisis drills, those are so important, especially when you look at things like a data breach. And if you think about kind of when you were in school, we had these fire drills, right? And we did them several times a year. But if you look at the likeliness, it's like 2% or less than 2% of actually having a fire in a school system. But we practice them, right? A data breach is, you're at a 30% risk of having a data breach, yet no one ever really practices what happens from a data breach, and that has to happen. So you can have a plan in place, you can have press training, and you can be as prepared as you can, but if you don't actually practice it, you could fall flat in the end, and it could be really devastating.
Yeah, I know that, from there is a component of that with tabletop testing from a business continuity standpoint. And I think I had read that 80% of all financial institutions activated their business continuity plan for the year, given that they had to really go to plan B during the lockdown phase of the pandemic. So I think it was probably a steeper learning curve, given what you're saying, that a lot of them aren't prepared from a crisis communication standpoint in getting the word out to their customers.
Yeah, absolutely. And, it's, I think a lot of financial institutions, and organizations across the board, it's not something that companies really want to spend the money on. It doesn't generate any revenue. It's a line item. But if you look at the cost associated with encountering a crisis, it's very, very high. So they really do need to invest in having some type of crisis plan and some type of experience with practicing it. Otherwise, like I said, it could be catastrophic.
Right. When I had read through the survey, I was surprised to read that it was people most likely to have a strong reaction to something like an enforcement action was older adults and women and people with some amount of college education. Did you find that to be a surprise? Is that aligned with other industry things that you're seeing on consumer behavior?
It was a surprise for me to see that. I assumed that there wouldn't be that much of a change between different demographics in terms of how they would feel about something like that happening. But, when you think about it, it kind of makes sense. Older people tend to have more money in their banks. They have 401ks, they have savings accounts, they have more at stake to lose and to risk than someone who might be younger, someone who may, be going through college and they haven't really saved a whole lot. So it kind of makes sense when you think of it from that perspective, that there's just more at stake for them. So they would naturally be more concerned about a data breach and losing their money.
Right. What is the survey 2.0? So now that you've gotten the findings from this report, and we'll post the link so people can download it and read it. It's very interesting from a reputational risk standpoint. Now, what are you curious to mine in the next survey?
So I think with this survey, what we identified is that there's certainly reputational risk, and for a financial institution that faces a crisis, there's obviously concern, and they can certainly lose the confidence of their customers or their members. What's not clear is how many of those customers or their members are actually going to act on that. And you touched on it a little bit, but the ability to move from one financial institution to another is not that easy. So it's very difficult to pull the plug and to move your money, move your savings, move loans over, and even like bill pay to transfer all of your your electric bills from one institution to another. So there's a lot of challenges and a lot of pain points with actually making that change. So our next version that we'll probably field early next year is, okay, well, how many people are actually going to act on that? We know that there's certainly some consumer confidence lost, but what does that really mean for a financial institution? Are those people really going to commit to leaving, and how easy is it to do that?
Interesting times. It's a very thought-provoking survey. I won't lie. I was really surprised to see some of the findings, and I'm really glad to share it with the people who do tune in to Ncast. So, Mary, thank you for taking time out of your busy schedule, and we will stay tuned for 2.0 when that survey comes out.
Wonderful. Thank you so much, Marnie.
Thanks, Mary.
Okay, everyone, that wraps up another great episode and our first season of the Ncast. Again, we can't thank you all enough for listening, subscribing, being a part of our community, providing us with great suggestions for guests. We've really had a blast doing this. We're going to take a little break over the holidays, let you all binge and catch up on the episodes that you've missed, and we'll be back with you in 2021. If you're not yet subscribed to the pod, you can do so on any of your favorite podcasting platforms. You can also see back episodes on Ncontracts.com. And if you're looking for more information on Mary's survey, please head into the show notes. We have the links for you to access all the juicy details for yourself. Thanks everyone for listening. We really appreciate you all. We're so excited about the community we're building here. Have a happy new year, and we'll see you in season 2.